Hi, I'm Rob.
And I'm Rob.
And this is Ask Rob and Rob.
Hey everyone, welcome to Ask Rob and Rob, the show where you get your amazing questions in and we do our very best to give you a decent answer in return. We've done this a fair few times now, and we've also reminded you a fair few times of how you can get on the show, but just in case it's not landed yet, or you're new to us, let's give you a reminder.
Yep, so easy. Just go to propertyhub.net/ask. You can leave us a voicemail there. You can send us a written question for the Sunday Times. Whichever way you want to send your question in, just get it done and you can be on the show, just like Richard's about to.
Hi, Rob and Rob. Thanks very much for all your useful output. It's really helpful for us budding property investors. I'm based down in the southeast and I have 4 properties held within a limited company and 2 properties held personally. My question really is about the opportunity in the southeast versus the rest of the country. I have a feeling it might be sensible, given I plan to do this for at least another 10 years, to consider liquidating the properties both personally and in the company and reinvesting up north where there's a slightly better proposition in terms of both yield and capital growth. Of course, with that comes realization of capital gains, transaction costs, stamp duty, and the turnaround on transactions. So I wondered if there's any general advice you can give, or even some calculations one might need to do to work out whether the opportunity cost of not doing it outweighs the costs of transactions, capital gains, etc. Any advice on this would be really appreciated. Please keep up the good work. Thanks very much.
Richard, thank you for your question. Really good question. And of course, without having all the numbers in front of me, it's difficult to answer. And there isn't a simple formula you should use to say, okay, well, if the returns fall below this level, then you should move into this other area. But I do feel there is some general advice I can give you that should help you develop your thinking and hopefully your strategy. In most circumstances, I would not sell the properties. There are exceptions, which I'll come on to, but in most circumstances, I would not, because of all the transaction costs involved. And you've highlighted that already. But it's not just selling down the property that you've got, and you might not have to remove your tenants while you do that, but it possibly will be easier to sell. So it's the loss of the income during that period, and then the loss of income when you have the void on the new property, and the gap in time of transacting on one to the other would just mean that it would have to be a significant increase in opportunity, and that's opportunity in not just yield, but actually capital growth, that you would consider doing it. And capital growth, as we know, is not guaranteed. So you can apply some of the strategies that we talk about on this podcast to identify areas that should benefit from capital growth. But even if you do that and execute it perfectly, it still might not work because property can be unpredictable. So what are the exceptions? Well, the exceptions would be if one of your properties is a bit of a dog of an investment. So it's a constant problem property, whether it's the tenant profile or it's just repair after repair because the property's age or there's lease issues, whatever it might be. If it's just a nightmare property and it's continuing, and it's not just it's been a nightmare once or twice, but it just seems to be on repeat, then that may be the sign, the signal you need to say, you know what, let's get out of this and move into something else. Because yes, your returns may not be that much better, certainly over the short term with everything we've talked about already. It's just the time that it's costing you and the headspace it's costing you may be worth pivoting. However, I do believe there is another way to do what you want without having to sell the property, and that is use equity. So hopefully in those properties you have some equity. And next time you refinance those properties, look at the possibility of taking out some of that money to invest in another property. Now, don't just do that willy-nilly. You have to have a plan here as well. But the plan is easier. Let's say your finance costs you 5%. Well, then when you invest, you should be looking for it to deliver a return of more than 5%. Because that's how much it's going to cost you to go into that property. The great thing about that is then it's far simpler to do, a lot less headaches involved, and you don't have any of the transaction costs. So by using equity, it will allow you to grow your portfolio. And a lot of people we've worked with over the years have implemented this strategy and done very, very well. And lots of people just who listen to this podcast who don't work with us have implemented this strategy and done very, very well. So yes, there are times when you should look to sell some properties down and move in to the next stage of your strategy. And we've talked about the monopoly strategy in the past, and then that could be a good time to do it. But it doesn't sound like you're in that situation right now. So look at equity as a potential option. And if there is equity there and you can get it at a reasonable rate, then fill your boots and build that portfolio. Hopefully that's useful, Richard, to develop your strategy. Best of luck.
Okay, let's have our next question from Andy.
Hi, Rob and Rob. Firstly, thanks for all the great content you put out on the podcast. I've been listening for a couple of years now. So my question, I recently bought a luxury high-end 2-bedroom new build apartment in Manchester City Centre. It's called The Viaduct. It's got 400 apartments in the block, and I believe around 60% bought by investors, so landlords. The market is quite saturated with rental apartments at the moment. Most landlords are currently panicking and reducing the rents to let them out quicker. So my quandary is, should I reduce my rent in line with the market to improve chances of letting out the property earlier, or hold on and hopefully get the expected rental income that I first set out when I first purchased it, and what the market really should demand? Obviously, renting out for lower rent would mean that the cash flow is lower, or break even, or a small profit. Holding out for longer means I have to cover the mortgage and service charges. Appreciate any expert advice you can give. Thanks.
Thank you, Andy. And Andy, you're being cheeky and it paid off. You also submitted this question to the Sunday Times and we've written you an answer. I don't know on the timings whether that's already come out, but I thought it was worth answering on the podcast here as well, because it's a really good question. And it's something that we always prepare our clients at Property Hub Invest for, because it's something that happens and it's nothing to worry about because it's something that happens. And if you don't know it's going to happen, it is really worrying, especially if it's your first investment or one of your first. But if you know about it and you're prepared, then it's no big deal. So it's really worth knowing about. So I'm glad you asked the question. So Manchester City Centre is the perfect example of this, because there is still a structural undersupply of rental property. But even so, despite there being a structural undersupply, when you get a lot of supply coming onto the market at the same time, it does temporarily saturate the market. So in your case, you're talking about a development. I don't know the development, but the city's got 400 units. That's a lot. And the nature of apartments rather than houses is that they tend to all come on at roughly the same time rather than being phased. So suddenly, boom, a whole load of extra supply. Now, because all those apartments are roughly interchangeable, some will be better than others, but they're all roughly the same. Lots are available at the same time. What's the differentiating factor? Price. The ones that are being marketed the cheapest are the ones that are going to get let first. So naturally, you do get this effect where the people who are keenest to get it let quickly or are willing to cut the rent do so, and that triggers a kind of a race to the bottom. Is that either you end up doing the same, or you stick to what you believe the rent should be or would be or whatever, and you end up with a property being empty for some number of weeks or months before it gets rented out. Or sometimes both. Sometimes you cut the rent to lower than you'd like, and it still takes a while to rent it out. Whichever of those plays out, you end up initially, in your first year, making less from the property than you would have hoped to, because either you've got a lower rent or you've got a void period in there. And like I said, that can be scary. The reason that we prepare people for this and tell them that it's going to happen is that this is just a temporary thing. Because if you think about it, when they're built and they first come onto the market, that's the only time that all of these apartments are all going to be available at the same time. And as we move into an era of indefinite tenancies, so it's not even like everyone's doing 6 months or a year and then they're coming up for renewal at the same time, you're just never going to have the situation again where you've got so much competition on your doorstep. What does that mean? It means that after a year, or at least when you come to relet, you're highly likely to be able to increase the rent back up to what you thought it should have been in the first place, and potentially even higher if the market's gone up since then. So as for which route you take with this, Andy, it doesn't really matter. You can cut the rent and get it let faster, or you can keep it higher and wait it out. It will get let in the end. Personally, I'd rather have someone in there, so I'm happy to accept a lower rate for that initial let, because I know, I've been through this multiple times, I know that it's just a one-off and I'll be able to increase the rent next time round. So I'm really glad you asked the question, Andy. That's going to help a lot of people out being able to hear that answer. And good luck getting that apartment up and running.
Well, that's us done for another week. Thank you for listening. Hope you found that useful. You know what else will be useful? Tuning in on Thursday for the Property Podcast, because we got a great episode lined up for you there. And you can find us in the Sunday Times on Sunday. So until those wondrous events take place, take care, have fun. Bye-bye.
Bye-bye.